Welcome, everyone, to Lunch and Learn. What I like to do with these, and every time it's a new group, and I love that. What I like to do with these is have you, if you can, be on camera. It would be great so that we can talk to you. We can have you answer things in the chat as well. There's going to be some things that we'll talk about. Today will be a little bit more interactive because I'm sure that there's going to be some questions that might come up. And some of you might think they're a little controversial when it comes to your profit margins. So I'd love for you to be able to enter into the chat too. Okay. One of the first things I like to do, though, is always have a group question. And this time, I'd love for you to talk about, has your business grown this year, been steady, or been in decline overall? And why do you think that is? Is it something that may have happened more because of personal reasons, or do you think it's done this because of industry overall? It's great to get feedback. And this is part of the reason why we can see that what's happening with other businesses around the world. Last month, I had people from Romania and Belgium and the United States and Canada. So business is growing. Awesome. More weddings, left retail wire. Okay, but still growing overall. That's really good to know, Lisa. Especially right when you make a leap to do that. So good for you. You're probably seeing more profit too without the
It
wire
definitely
service.
helps. It certainly helps.
Good, good. Love to see that. Has grown. Weddings, more local business. Love that. Anyone else? I know there's more of you on the call. Tell us what's going on. So let's think about this. Everyone's growing, which is really good. Are your profits growing? That's the point, right? Everybody's had things that have happened this year. And so, first of all, who am I? Some of you know me personally, some of you don't, but I basically have been in the industries in retail and wholesale distribution for over 35 years, primarily in the floral industry. I am now a speaker, an educator, an author, and I coach, and primarily to help small businesses grow their business, especially in profit. I am a multiple seven-figure business owner in the past and have enjoyed that. But generally speaking, the valleys that I experienced, most of them came from, really, when I look back on it, having a lack of cash flow or having a lack of, basically, because when you don't have profit, you don't have cash flow. And so I was squeezed most in my business from that, right? So when we look at this, I want you to think about, what's my mission now? Well, the whole reason why I do the coaching and Propel is to really, and I have no idea why it's not showing up, is to provide business owners with strategies, the knowledge and the resources so that they can grow their business with accelerated profits, because you all are passionate about what you do and you need to be able to show that and still have organization, still have systems and processes in place, and be in that professional, financial, and personal success. That's where I see most struggle. And most, if you know me long enough, you'll know that I don't see business problems as much as I see personal problems that leak into our business. Generally, it's a lot up here. What's going on in our mind? So small business is vital to our economy and our community. It helps our economy grow and our community grow. Globally, 90% of businesses are small businesses. And when you think about that, in the US alone, 99% of businesses are small, and they account for the jobs. 47%. That's crazy, right? If you think about it. So what are we doing? What do we do to do that? So 98 have fewer than 100 employees. And then 89% of those have fewer than 20 employees. How many of you go into that category? Right? All of us that are here. And some of us are just solopreneurs, which that's a whole other story too, to be able to keep up with things. So what I want to go over today, though, is to be able to show you how you can avoid business failure, right? 20% fail within the first year, 50 within the first 5, 65 within the first 10, 80% of it all fail due to lack of cash flow and not enough profit. This is why I do what I do, right? I want to see that percentage go way down. So today I want to show you how misunderstood pricing can affect your profits. I want to also have you know that if you're making certain things, how do you know if you're making enough to break even, right? Do all of you feel like, raise your hand if you feel like you can know that you're making enough to break even each month. Okay, this is why I'm teaching on it, right? Okay, so think about it. And then I want you to be able to answer what gets you faster results, lowering your overhead or increasing your sales. What do you think it's going to be? So we can talk about this. Feel free to raise your hand. Feel free to ask a question. That's totally fine wherever you're going to, whatever you want to look at, okay? So the first one is misunderstood pricing. And I know most of you on the call are in the floral industry, but Fidelia, I know you're in more of catering, but a lot of this will apply, right? So I want you to think about it. I have a client that sells custom yard signs. And the reason why I'm doing this is because it's such a basic area to look at. And I thought it would break it down a little bit easier for you when you're looking at this, okay? So he has one particular sign that he sells a lot of where it's $100 in materials and $75 in labor. Okay, that equals 175 cost of goods. We all on target for that, right? So first and foremost, how many of you all are including your labor in your cost of goods sold? Can you put it in the chat? Do yes, Y for yes, N for no. I don't even, not even thinking about it as much. Okay. Good. Fidelia, Lisa, thank you. Okay. I know, Robin, that's changing. Okay. Christine, awesome. Welcome, Xenia. What about you, Xenia? Do you currently put labor in your cost of goods sold?
I have it in operations.
Okay, so in your fixed expenses?
Yes, I believe so. Yes, above the line.
Okay. So generally speaking, the reason why your labor goes into your cost of goods sold is your labor for everything that you do goes up and down and fluctuates with your amount of sales that you make, right? That makes sense. The more you work more, or your team may work more with the more sales that you have. So if you are, especially if you're going on when you look at your profit and loss statement, your fixed expenses are going to be more for what someone would do in a salaried position or administrative work or things like that. So it's really important to put, whenever you're creating, whatever you're doing, that those things go into your cost of goods sold, because that's what's going to fluctuate. So he told me he wanted to be able to make 35% profit on each one of the signs that he was selling. Do each of you know right now how much profit that you want to make when you're selling something? Ideally?
No, that's why I'm here.
Okay. Okay.
Yes.
Did you know that across the board, because the majority of you are florists, across the board, the net profit of florist shops is only 10%. The gross profit, which is above, this is calculated immediately after you do your cost of goods sold, is at 70, it's actually 68.9%. So that's what gross profit should be on, that's what the national average is. Okay. Fidelia, I've got to look that up for catering, but I'm sure it's very close because they're both very service oriented. But when you look at it, he was figuring things out like this. So he was trying to figure out, okay, this is how much I'm selling this sign for. And he actually sold it for $240, but it was 175. He was doing it times 1.35 because he wanted that profit. So his total price was $236.25. I'm like, okay, is that correct? So what you do is you're plugging this in, and you just need these 4 numbers just to really look at this, okay? And feel free to get a calculator out on your phone, totally fine too, just so you can test this out. So let's say his revenue, what he was selling for $236.25, his cost of goods were $175. That gave him a gross profit of $61.25. His gross profit percentage is then divided. Whoops, it left me. There we go. His gross profit percentage is then divided by the retail price. That's how you figure this out. Okay. When you do that, he's only getting a 26% profit. That's huge. It's not what he was doing. He was only getting 75% of the profit that he really wanted to target. And the reason why is that when he did this, doing that kind of formula is wrong. What you need to do is you get to use the inverse to calculate this properly, meaning that you would divide your cost of goods by 0.65, the opposite of what it is for the profit that you want to make on something. So let's say that you wanted to make a 30% profit on something that you created. Maybe for you, it's $100 floral design, and there is maybe, I don't know what you're charging per hour for your floral design skills, but maybe you're charging $60 an hour. Maybe you charge $100. Maybe you're only charging $35, or maybe you're charging $15. You're going to take the opposite of that, the inverse, and divide that by your cost of goods. That's what gives you then what the cost should actually be. He should be selling it. His sign should have been at $269.23. So what we do is we plug this in, and you look at it. You see now when you divide, because his gross profit is at $94.23, he now is making the 35%. So one of the ways I'm going to show you, and because there are so many florists on today, one of the things that has been coming up often when I'm working with florists is that, will we just take our things and our flowers, and we mark them up 5 times? That is an industry kind of standard that some people have started throughout the industry. But what I'm going to tell you is, if you are deciding what you get to decide, how much am I going to make an hour? How much am I worth an hour if I'm designing? And Fidelia, the same thing goes for you as well. How much are you worth an hour if you're creating your those luxury desserts? What does that look like? When you're taking that out, if you're just doing everything cost times 5, you're not covering any profit for yourself. It's not calculating right. You're undercharging most often for what you're charging. So to understand, this florist was charging $65 an hour. No, he was a sign builder. He did yard signs, Christine. And so he wanted to make 35% off of every sign that he made. So it's deciding in advance, how much profit do I want to make on what I design? And so when he did that, he was like, okay, I want to make 35%. So what I'm saying then is, okay, if you want to make 35%, then you get to divide your cost of goods by the inverse of that, which is where we got the 65. So he needs to know he was charging, if we go back, I gotta skip back. So here, his materials to make the yard sign was $100, and then he had $75 in labor. I don't know how much that is in hours, because he just said, this is how much my labor charge is. And I think that might be where he's come up with based on his signs. Okay. So this is why I want you to understand whatever your labor charge is what makes the difference then in how much your cost of goods sold actually comes out to be. Does anybody have any questions around this?
It would be helpful if you just wrote it out as a formula.
Yes. So what I can do is put it out in, I mean, essentially here, when you do it like this, as far as your COGS, the formula is right here, is you take your gross profit that you're wanting to make, right? And you're coming up with the revenue. So if you're going to take your 175, I don't know what your cost of goods sold is, right? But what I'm saying is when you're creating your recipes, let's say, Lisa, are you using a certain platform to create your recipes for your events?
So actually, yes, I use True Client Pro, and
Okay.
that's one of the things I'm working with Mayuri on is how to properly reflect labor costs into the mix.
Yes. So when I create my recipes, I used to put in labor as an actual item, and it went into my cost of goods. So I would calculate my labor, meaning like I named a labor one, which would be me. If it was something that I was going to design, my labor was more expensive than someone that I hired or a freelancer or someone else in the business, because I was the main designer, correct? So I would have labor one, which would be anything that I was going to do, and labor two, which would be a lesser amount. And then I put in based on, okay, for me, it was 120 an hour. And so if I calculated, let's say I was doing a bridal bouquet, I automatically calculated no matter what, any bridal bouquet, just to touch it was going to be an hour worth of my time.
Okay.
So let's say I'm doing a bridal bouquet and it's more of a cascade. There's some wire work that needs to be done. So I would be putting in like maybe 1.5. So then it would be equal to $180 worth of my labor. Does that make sense?
Mm-hmm.
So that's how the formula would work, and it would be included in all of my cost of goods.
Okay.
So that kind of thing would be, and I went ahead and decided what the markups would be. So on my labor, there wasn't any markup. It was just my flat hourly rate.
Okay.
But if you're looking at just your costs, then your cost of goods sold would be everything that you're putting into that arrangement at the cost factor. And then how much is it for your labor? And then that is taken away from, okay, this is how much I want to be making from it. Does that make sense? So when you do that, others are doing like cost times 5. For instance, I have a client that I did the other day and I showed this to her. She's like, okay, so my average compote, I'm selling at $250 for a reception. And I said, okay, what's your formula? What are your margins? And we looked at it, and the way she was calculating, all of her fresh was divided, was times 5. And her hard goods, she was doing it 2.5 times. She was selling herself short by over $30 per centerpiece. So she was working for less money than what she wanted to make for her profit. So it's hard to do the formula unless somebody shows me, like, for instance, here's what I do, like in True Client Pro, like I could look at your recipe and see how your markups are, and then be able to show you exactly, are you making your profit? Are you building in your profit into your price?
Okay.
For sure. I generally would start building in my profit into my price of everything. I also have a um, bloom retail bloom kit. I think, Robin, you have that, don't you? Is Robin still on? I don't see everyone across the top here. There you go. Oops,
Just
you're on mute.
nodding your head, yes.
Yeah. Okay. Yeah, it's a cheat sheet. So like if you're in retail, it kind of says, okay, so you will be doing like a $100 arrangement. What it's done is it tells you, here's how much you can actually have someone pull in retail flowers, because it's got the markup in the background, and it's also including the profit amount in there too, so that the person that's designing just knows how much retail product they need to go grab, instead of trying to do the calculations each time. Robin, has your team found it helpful? You're on mute. Okay. Okay. Yes.
You have to unmute her yourself.
Oh, okay. I'll do it. Let's see here. There, did that work?
I got it. Yeah.
Okay.
Yes. They're bucking it a little bit, but yes, they're finding.
Well, and I think that's what happens, because when they start to do it, they start to realize, oh my gosh, I've been putting in more product. What do I do?
Yep.
How can I be more creative with the actual amount of product that I'm doing? Or do I maybe need to start looking and using different flowers, so that I'm not always using the most expensive out of the cooler, right?
Yep, exactly.
Christine, it says, yes, I do want to make 70%. So my inverse would be 30. So you want your profit to be 70%? Or you want your gross profit to be 70%? Gross profit. Okay. You're going to hear some dogs, because every time I do this, the post person comes and delivers mail every month at this time. Yes, so your gross profit, what I want you to think about, Christine, is your end goal, is your bottom line profit. What do you want that to be? So yes, for you, you need to do, because your gross profit here, if you want this to be 70%, you're going to have to look at it a little bit differently, because you're going to have almost no profit in there. You're going to have your markups really, really high. I hope that makes sense. It's moving along. If not, just ask me afterwards, Christine, and I'll dive into that a little bit more with you, for sure. Does anybody else have any more questions around that? Okay. Next one would be, how do you know your break even? In this one, generally speaking, I have calculators that we do it, but if you're breaking even, this one used to get me at first, because nobody ever explained it to me in a simple way. It basically means, are you selling enough products and services to exceed your monthly expenses? Otherwise, you're going to be cash poor all the time, always trying to make it work. So how many widgets, I love that word. How many widgets do I need to sell this month? How many floral arrangements do I need to sell? How many luxury desserts do I need to sell? How many weddings do I need to sell to be able to make it financially? And when you start to map this out across an entire year, obviously there are some months where you're probably not as busy. So then you start to see, okay, I need to do more here so I can make it up for here. And if you're running into that, that's what starts to happen. But here's some basic things. You only need to know 3 numbers to be able to calculate your break even, okay? Your revenue, your COGS, and your overhead. Here's how it works. So if you have, and I'm using a simple number, if you have $100 in revenue and your COGS, let's say, are $35 of that is what it takes to create that $100 widget, then you have a gross profit of $65 coming back into you. Okay. So for instance, Christine, this would be similar for you, right? If you have the $100, or let's say it's $1,000 something or other, your COGS would be 350. Your gross profit would be at 65%. Okay. Then let's say your overhead is 3,500. Overhead is all of your fixed expenses, anything that's rent, salaries that you're paying that aren't in the cost of goods. It's going to be all around what are your utilities, how much is insurance, all of that. What is it per month on average? Okay. And I will make the caveat when I'm talking about $100, that's the average price of whatever your widget is. You might have widgets that are 150. You might have widgets that are 75. What's the average price? You just look at your average price. Then when you do that, you calculate this, and that's how you get your break even. You come to 53.85, and you calculate your break even by dividing the $3,500 of your overhead by your gross profit. This is how you get. So basically, this person for the widgets needs to sell 54 widgets a month in order to break even. Does this make sense?
Mm-hmm.
So for me, when an accountant used to ask me, I would be like, well, my numbers are all over the place. I'm doing events, I've got retail, I've got wholesale clients. What I had to do is sit down and say, okay, here's what I'm going to do. I'm going to break this out and think about it overall. If I do weddings, if I do retail, if I'm doing distribution, what does it look like in each of these categories, what I could do each month in order to make my monthly nut? So you can break it down as well that way. Now, Lisa, you've moved from doing retail and events to just doing events. Do you know what your average events are each month?
Actually, no, I do both retail and events. So I've got.
Okay, so you're still
pieces
doing
of
both.
the-
You're just not doing wire services.
Exactly.
Perfect. Okay. So for you, you would have two different categories. Robin's in the same place. How many weddings do you do on average, and what is the average sale? Right? So you would plug that in, and then what's your average sale like on your retail? And then if you want, you can look at it. And what I would do is I would still keep my overhead price the same. I wouldn't divide that up. And I would look at it going, okay, if I was just doing weddings, how many would I need to do? Or events in general, how many would I need to do? If I was just doing retail, how many would I need to sell? Then when you take this out, you can look at the combination on any given month. You could go back and forth on these so that you can know what your break even might be. Does that make sense?
Yeah, that's really helpful.
Okay. So I would use the calculation for each area in my business. Christine, do you still do a lot of rentals? And anyone else? Laura? Xenia? Okay, took a break from
Yes.
rentals. Okay. Xenia, what type of services do you offer, or products do you offer?
So my business is kind of broken up into two main segments. So I do landscaping on one side and then flowers on the other. On the landscaping part of my business, I do design, installation, and containers.
Okay.
On the flower side, I operate a flower farm, and from that,
Awesome.
I pull for CSA and
Okay.
events.
Okay.
And then the third leg would be workshops and on-farm events, whether educational or entertainment. So
Okay.
I do a little bit of retail and a little bit of wholesale, but not enough to count them. They would just be, added, um, added margin. But
Okay,
what I do
perfect.
is um, when I budget, I figure out, um, how many designs and gardens, um, I'm, I can do, fit into my schedule and actually execute on. Um,
Okay.
and then, pricing on that. And then on the farm side, how much I can produce in the fields, will tell me how much capacity I have for CSA. And then I can price that. And then on my events, I know that
What is, Xenia, just give me what is your acronym for CSA? What is that?
community supported agriculture,
Okay, good. Okay. Thanks.
that's people sign up for a share. Usually it's vegetables, but I do it with flowers. A
Awesome.
weekly bouquet.
Now,
Um,
and are you seasonal?
to some extent, I do. My CSA is seasonal. It's from May through October. I do events also only from May through October so that I can provide the majority of the flowers for that. Um,
Okay.
on the landscaping side, that's pretty much almost year round. That's like 10 months out of the year. And then the education is all year round.
Okay, perfect. So in your instance, what I
Mm-hmm.
would do is almost create yourself like a little spreadsheet
Mm-hmm.
and have it with tabs. One tab is your CSA, all of that type of work.
Yep.
Another tab is just on your workshops, since that goes over the 10 months. And then the other tab would be on your you said events or the
The
cutting,
landscape.
the landscaping, yes, the
Mm-hmm.
landscaping and containers. And so what I would take from that is say, okay, obviously you need to live 12 months out of the year,
Mm-hmm.
not just 10 or 6, right? So it would be, the first one would be your overall calendar, right? Each month. And then it would be breaking even on this, meaning how many do I do each month of the landscaping and the containers? What's the average
Right.
price
Mm-hmm.
of that, right? So you can break that down. And then when you have all three, you can be able to see in a better fashion, okay,
Mm-hmm.
this is how I can figure out how I'm going to make it work all year round for me financially. In
Mm-hmm.
these few months, I've got to hit this at a certain level.
Right. Yeah, I think, and I do that, which allows me to figure out, like, if I'm planning on a particular landscape project and that falls through, I know that then I have to, press the pedal on events. Maybe that means if I can't get another design project to fit into that, I'll need probably 1.5 events to fill that hole.
Okay, perfect.
So, um, yeah, that's kind of how I look at it.
Good.
And the overall layer is, keeping in mind how much I can actually get done.
Yes. We're only one person, but that also allows you to a certain extent to see when or if do I need to hire some help? And if I have that help,
Mhm.
like when could I actually do that? Or no, I want to keep it to this amount so that I don't have to hire, right? There's a lot of
Mhm.
people that do it that way too. But you have so much more power over your business when you know these numbers and you can feel confident moving forward with something.
Definitely. And when you were talking about labor before, above the line, or so I do have an employee that is, um, full time,
Okay.
and as she works across all business segments. So um, she's my fixed labor, if you will. I mean, I have to pay her whether I have an event or not, because she works the
Yes.
field, the landscaping, and she helps with workshops and all of that. So, but the incremental employees or freelancers, they are part of my cost of goods sold because they are, project specific.
Yes. Well, and even if you wanted to parse it down even further, you're a person that is full time. I have done that before when I had one person that was also worked more hours or worked some different projects.
Mhm.
25% of his, my accountant, I had my accountant take 25% of his salary and put
Mhm.
it into my cost of goods,
Mm.
because if that person was gone and I had to divide them into two,
Mhm.
I would know how much, is 25% of his time kind of up in that cost of goods area, or is, 25% of his time doing administrative work. It's giving you just even a more detailed line of where that goes. So your accountant can move that for you a little bit so you can have better, a little bit more of how much you're spending. But
Yeah, that's a good idea. Doing it though, kind of as a sub report, because I'm in New York. I don't know where everybody else is, but I get audited every year,
mm,
and by insurance company, especially workers' comp, and so I the more simple my P&L is,
the
the
better.
so we
Yes.
keep labor all together except for 1099ers, and then
Okay.
so I do have a lot of other reporting, but it's kind of um in Excel, downloaded in Excel, so that when I have to submit my audits,
That's
it's
smart.
you know.
Yes. Yeah, there's one thing for taxes, but it's another thing for you to have an idea of really in your business where the money's going. So I agree with that. That's awesome. Christine, yes, there is going to be a recording. So you can for sure hear this again. Definitely. So let's look at one more. Number 3 today is to leverage your P&L, which was, what do you do? How do you know in your P&L what makes the most money in the shortest amount of time and at zero cost to you? Okay. For instance, especially with things going as they are right now with the economy, I have clients that say, okay, what's the best thing for me to do? Should I lower my overhead, like cut costs, or should I increase my revenue? Most often we look at, I've got to increase sales no matter what, right? But here's what I want to be able to show you today is, if you look at this, and again, we're looking at just a really simple type of P&L, right? You've got revenue, your cost of goods, your gross profit margin, your overhead costs, and then your net profit. So if you're looking at, let's concentrate on lowering your overhead by 20%. If you were to do that, that means your revenue still would stay the same. That means your cost of goods sold would still stay the same. But you're looking at your gross profit margin, that's all the same. What if you just focused on cutting your costs around your overhead, right? Those are all your fixed costs. If you were to reduce that by 20%, overall, you would have a new net profit of over $12,000 more. The reason why I'm saying that is, if you look at that, reducing your costs on your overhead immediately adds cash flow into your business. Okay, it always goes 100% to your bottom line, no matter what you do. So you have an increase of $12,000 there, right? So what would it look like? Because it's not even increasing your revenue. So when you think about that, what does it look like then to, if you increased your revenue to get that same $12,000 in profit down below? So since his gross profit was at 40%, right? That meant for every dollar you make, 40 cents of it is profit, right? So you're going to take that $12,000 that we made in profit before from reducing our overhead. We're going to divide that by the 40 cents. And that means $30,000. Are you tracking with me? That means that you have to make $30,000 in additional revenue to get that same $12,000 worth of profit by cutting your costs. So every dollar that you reduce in your overhead goes immediately 100% to your bottom line. And every dollar of increased revenue only gives you 40 cents to your bottom line. So that means that reducing your overhead for this particular P&L has over 100 and 250% greater impact versus then increasing revenue. Does that make sense?
It makes sense, right? But it's a bit of a simplistic argument, right? The whole idea of do more with less. Of course, reducing overhead, drops straight to the bottom line. But that's kind of like the holy grail, to reduce your overhead without impacting revenue. If
Not
anybody
your,
could do it,
okay,
everybody would.
well, actually reducing revenue, reducing your overhead, gosh, there's like 10 different areas you can do that. You can start looking at reducing scrap. Do you ever have to redo something if it comes back because it wasn't done correctly the first time?
Sure.
There's things of how do you increase, how do you look at your insurance? When's the last time that you reviewed your insurance policies to see if there's a better option for your insurance out there?
Okay.
When was the last time that you could review your telephone charges or your services that you're getting? Is there something else that's better for you? The main thing is when you're looking at these different areas, all these small things add up. So it could be like auto insurance. I've had that looked at before, and then the next thing I know, it's everything has changed. Absolutely, Xenia, review your subscriptions. The first thing I have someone do is go and grab their credit card statements and go through that. I tell my clients, if it doesn't help you keep a client or get a client, it's better to eliminate it. And I know that's harsh, but in harsh times, if you've got to reduce your overhead and get some cash flow in your business because sales are kind of stagnant, these are the simple things that you can do because it compounds upon each other, right? If you're just doing 1% here and 2% reduction over here in your overhead costs, your fixed costs, it's going to add up. And over the course of the year, it's thousands of dollars. So it does, you're right, it sounds like it, but we also make decisions on certain things. Like, for instance, I used to have subscriptions to like 4 or 5 different floral magazines because I absolutely love them, but it didn't help me get a client or keep a client.
Right. Now, it's a fair point. I don't mean to minimize what you're saying. I guess I was just trying to say it's easier said than done. What you're saying is, you got to get into the nitty gritty. Fair enough.
Yes. And that's what I do most times. I look at it, cutting costs always returns 100% to your bottom line. So if someone needs to have an injection, that's where I'm going to go with them first. Here's a simulator that I use often with when people are talking to me in our first call. We're just looking. All of these are low-hanging fruit areas in your business that you can look at and increase your business by huge amounts just by doing small percentages. And so I've just blown up kind of like what it looks like on the screen. But this is what I do when I'm talking to people. I say, okay, what if you could cut your cost by 10%? What would it look like? What if you could cut your cost by 5% over the course of a year? And it will show you how much, because these are algorithms that are fed into it, how much that actually can do. Then there's other things that we can focus on, like all of these are foundational strategies in your business because it won't cost you extra money in marketing or advertising. In most small businesses, don't focus on these things. Fidelia, you've been at my recent workshop. She's here local in Washington, D.C. area. And Fidelia, are you available to chat for a minute?
Yes, I am.
So can you tell them a little bit about what you learned with some of these items? We only covered like 6 of them in the workshop, but just to give them an idea of what kind of impacts could happen.
Yeah, so I remember when we did a workshop, you actually showed us a lot where we could cut costs and where it can put more money in our pockets. Also, a lot of marketing. You showed us that once we push out more marketing and even how to do the marketing, that also brings in more clientele. And of course, more clientele means more money or
Yeah,
more
more
exposure to
revenue.
our business, more revenue. Exactly. So yeah, it's just a lot about the marketing and how to get out there basically and how to bring people in because she also showed us different companies with different what was it websites.
Case
It was a
studies,
website, but
yes.
they're
Yeah, there's
uh
squeeze pages, how they bring
these
people
pages.
in. Yeah.
Exactly, right? And literally a small change in the how they put in their squeeze pages makes a huge difference on getting clientele in. Are you gonna show them like the different ones that you had showed us?
Not today.
Oh, okay.
That's what I'll be, because obviously this is lunch and learn, so it's a quicker workshop. But what I try and do, and what you'll find over the next several months, is I will go and dive a little bit more into each of these different areas. Today was more about kind of financial overall. What do you need to know for your profits? But these all affect your profit and your bottom line, but we kind of will dig in just a little bit, like, what does it mean to upsell and cross sell? What does that mean? Actually 37% of people, when they're asked at the time of their transaction to upsell or cross sell a different product, will buy. Are you thinking about upselling in your business? And what ways can you do that in your business? That's what the lunch and learns are for, to kind of go back and forth and say, okay, how can we expand our thinking beyond what we have already been in just our business? Because we get our blinders on because we're just going in daily business and just trying to survive. How can we think on our business in a different way? So that's why I'm doing these workshops each month, to kind of give you just a different way to think about ways. And this month purely was about how can you know your break even? How can you make sure that you're adding profit minds what you want to make into your building your recipes and how you're pricing things. Next month, I'm actually going to talk about ways to increase prices. So Fidelia, yes, I'll be diving into the increased prices area and what you can do, how you can do it, and also talking to how people often are afraid to raise prices because they think that they're going to lose a bunch of customers, and we'll go through that as well. But for me, if you ever want to do a profit acceleration assessment on your business, with the simulator, I'm happy to show you what it looks like with your own numbers in your own business situation. I've done this with Robin before as well. And it makes a huge difference where you can see small areas in your business. You're more than welcome to schedule a time with me, and I do that complimentary for you. And you get a little roadmap after it's done, so that you can kind of see where the areas are that we covered. Okay. So other than that, are there any other questions for today? I try to keep you under that hour so that you can get back to all the other things that are on your plate for the day.
Really useful and a lot of good things to think about. Thank you so much.
You're welcome. You're welcome. So glad you joined. Anyone else have questions?
No, just wanted to thank you. This was my first lunch and learn with you. And I'm a kind of numbers spreadsheet person. So
Good.
I like the way you were showing your points, making your points visually that way. And so very easy to follow. I appreciate it.
Good, good. Yes. And I realized that when we talk numbers, like Lisa, you're saying it would help if it was a formula. I am working in the background trying to do one specifically for floral when it comes to how that works with the profit margins, because it's so antithetical from what the industry has taught everyone. And I was part of that team for many, many years until I realized I wanted to make more profit. I didn't want to be the average 10% owner. I wanted to be making 20% every year back in my pocket. I work way too hard. All of us do, right? In general, we work way too hard on our bodies, hard on our minds to not get out what everything that we put in.
I think
So,
like Nia, I tend to think in terms of the spreadsheet. If I can see it in an algebraic formula, pop, it makes sense. But I get where you're going. And this is all, this is all trending positively in the right direction. Thank you.
good. Okay.
One of the things I wanted to mention was that to your point that we really kind of need to understand our numbers rather than just apply an industry markup or percentage. I think it's called enterprise analysis or something like that. But I actually wrote down and looked at how much time every task takes on an event, from proposal writing through striking and cleaning my vessels at the end and putting everything away. And then I put labor costs to that, so that I can figure out, is that, install percentage of, whatever it is, 30 to 45% or 40% right for me.
Yes.
I found that it wasn't. So,
and
so
that's what I want to encourage you to think about, is that you're in charge of your own business. And Xenia, you hit the nail on the head, so that you can see exactly what it means what does it mean for me in my business? It's great to use the industry standards when you're first getting started, because you have no idea, right? But then when you start going and saying, okay, what's good for me? What do I want to get out of this? And how do I want to be able to retire? Or how do I want to have an exit plan? So just so you can see where you want to go. Okay. And Robin, yes, I can send that to you. Okay. So everyone, I hope you have a wonderful week ahead, an amazing Thanksgiving time frame too. And I will see you that first Wednesday in December, and we'll be going over increasing prices.